Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth Mackenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it's not been a great week, has it?
No, it hasn't been a great week. It's a week of stop losses for us, which is not great, but it's also not the end of the world. You know, we've been stopped out of two recent trades, Mediclinic and Capitec, but we got stopped out at good levels, and both share prices have moved lower. So when I look at a situation like that, I think, well, we got stopped out, but our stop losses thus far have been effective.
Yeah.
And I think one thing we always need to remember is that one of the reasons, I think, why this show has been a success over the last nearly 6 years that we've been doing it is that we've always been incredibly disciplined with our stop losses. We've never once have we allowed a loss to get out of hand on this show. And that's critical. And I really do feel that that's why we've done well. If you take care of the losses, the profits will generally take care of themselves. So getting stopped out and losing on trades, sometimes that's part of trading, and you just have to accept that. So we'll talk about it as we go through each trade, but you know, that's the reality of trading. You don't make money on every single trade.
Yeah, I mean, as you say, 60%, if you can get that amount of trades right, you're doing well.
Yeah. And
stop losses, you don't want them to turn, because quite often they do turn into bigger losses, and if you abandon your discipline there, that's when you come a cropper. I was laughing though, because last week I was extolling your virtues, and I feel like I put the kiss of death on your trading. But let's start off with Mediclinic, which was the most recent trade for the portfolio. You put it on last week, and in fact off air, I remember you saying, geez, this thing might not work out, you know, as soon as I put it on. So tell us what happened there.
I was concerned last week that it might be stopped out before we had even finished recording the show. But it didn't get stopped out as quickly as that, fortunately. But let's quickly look at it. The chart of Mediclinic is up on the screen now. That's a daily graph that we've got over there. And what I identified was that the stock had pulled back to this uptrend, which goes back about 1 year. The stock had come under quite a lot of pressure following results that were a little bit disappointing, and we saw the share price getting hit very hard. But I adopted the famous 3-day rule on this, which often, and invariably it does work for us, but obviously in trading nothing is 100% guaranteed. And in this situation, we saw that share price trading down from 120 down to about 108 Rand, where that uptrend support came in. And you can see the big volume spike over there, indicating lots of noise between buyers and sellers. And if we go further and we actually look at this graph, look at an hourly graph of Mediclinic. So now we're looking at effectively 1 month worth of trading history, but every candlestick on this graph represents 1 hour worth of trade. You can see the big drop off to the left of the screen there, and then we waited the 3 days. On the third day, we did start to see some stability coming in. We saw that 108 Rand support holding. We saw a big reversal off of that level. So that to me gave an indication that it was time to buy. And we went along and we bought at 109.40 Rand for our portfolio, with a stop loss at 107. That stop loss implied that it would have needed to go below the recent lows before we had bought. And I was looking for a move up to 116 Rand here. Unfortunately, things didn't work out as we expected. The broad market has actually come under a lot of pressure. We've had 10 down days in a row on the JSE, which is actually close to an all-time record.
Yeah.
Anyhow, this share Mediclinic was not escaped the weakness that we saw in the market, and it did trade down below our stop loss, and I ended up getting out of the trade at 106 Rand and 72 cents, so just underneath what our stop loss level was. Remember that I always only use manual stop losses on our trading, so that's why there's a little bit of slippage there. And that means that we lost 4,592 Rand of our money. Yeah, it's not ideal, but you know what, in percentage terms, it's about 1.3% of our capital that we've lost on this one trade. So, you know, the nice thing about losing 1.3% of your money is that you've still got 98.7% of it left, which is always the upshot.
Yeah, exactly. Look on the bright side, and also looking on the bright side is, yes, there might have been a bit of a spike, and at which point you might have thought, oh, geez, I shouldn't have cut out. but the share has subsequently traded even weaker, and
Yeah,
so you'd be in a worse position. After
exactly.
you stayed in.
It's been trading down at about 103 Rand today, so it's gotten worse than where we cut out of the trade. So I'm happy that we got out here. You know, and remember also, your stop losses do two things. They protect two types of capital: your financial capital, one, but also your emotional capital, and i.e. your confidence. And it's very important. If you keep your losses small, generally your confidence will remain fairly good and fairly upbeat. You don't want to get into a situation as a trader where you take a big smack, you lose money, financial capital, and where your confidence gets destroyed, because then that, you know, almost inhibits you from putting the next trade on. So cutting out and taking small losses is fine. That's part of trading. That's part of the nature of the beast.
Yeah. And then when you lose your confidence, it seems like all your calls are against you, and you get into a bit of a negative spiral.
Yeah,
what about Capitec? And this one is frustrating because it was working out.
Yeah.
And I'm sure you probably feel, I don't know, maybe you kicked yourself at some point thinking, I should have cut out a bit earlier because I would have been on the right side of this trade, but it didn't. So what happened there?
Yes, all right. So Capitec has been disappointing because last week we were on the show and we were making good money out of this trade, and we've ended up cutting it with a small loss. If we have a look, what got me interested in this trade was a couple of weeks back, or in early May, we noticed the PIC selling a 5 billion Rand stake in Capitec through an accelerated book build. And these things always get done at a bit of a discount, and it creates a little bit of an overhang of shares in the market, which typically knocks the share price. But it's a short-term phenomenon, and you usually get a big bounce that responds to that oversold situation. So I went along and I bought 470 CFDs for our portfolio at 514 Rand and 30 cents with a stop loss at 507.50. Now, I was looking for a move to 580 here, which may, in retrospect, have probably been a bit greedy and a bit ambitious. The thing is, we did get the bounce we were looking for. We got a bounce up to about 545 Rand. And at that stage, I thought, well, this is awesome. Now we're on our way back to go and revisit the prior high. And that pretty much was the end of that bounce. And in retrospect, I probably should have looked at this and said, well, the share was trading at 540 before that big book build took place. We just look for a rally back to 540 for the share price to normalize to where it was before, take our money, get out, and walk away. That's, in hindsight, it's always easy to look back and say that's what we should have done. Unfortunately, it started to turn down after that. And in the end, I've actually ended up cutting that trade just below our entry level at 512 Rand 53. And obviously I've cut it prematurely before our stop losses kicked in. And the reason for that is that I don't like to see a winning trade turning into a loser, ever.
Yeah, I mean, it just makes you feel worse about it.
It does. It really does. And the thing is, we were actually making decent money on this trade. To then see it go and lose money is very, very disappointing. So the net result is that we lost 1,865 Rand here, which is about 0.5% of capital. So really not a catastrophic loss. And again, I'm glad we cut this trade, because what's happened since is that it's been trading down sub 490 Rand today. And in fact, I think that's quite a good level to start looking to pick it up again.
Yeah.
And certainly I actually on the side have been buying some at about 488 today. So, and we may very well talk about that on next week's TV show.
I mean, if you just look at, I suppose, the level to which it traded, and you talk about hindsight, because one of the problems or issues that a lot of traders have is not running their profits.
Yeah.
So, it's easy now to say that was a peak that we should have cut out of. But at that point, you probably thought, well, if I cut out of it now, it might be too soon. Yeah. And so you, and this is one of the classic errors that traders make is that cutting out of a profitable trade too quickly.
Yeah.
So
I mean, I've said many times on this show that for me, the hardest part of trading is knowing when to sell. Getting good entries, I find I'm quite good at that. Executing a stop loss, no issues there. Knowing when to sell at the right time is extremely difficult, because you're right. You either want to run a profit and then you end up overstaying your welcome, as we did in this case, or alternatively, you cut the trade and then it carries on working and you could have made more money. It's a very, very difficult balance to strike, and something I'm still working on in my personal evolution as a trader.
Yeah. Garth, so I know that you want to focus this week on what the overall market is doing by way of the top 40. And as you said a little bit earlier, I think today we might be the 11th down day, which is, no one's seen that for a long time.
Yeah.
So are we seeing the turn here?
Well, it does look as if we, certainly looking at the market this afternoon, it does appear as if we're putting in a reversal, and I think there's an oversold bounce that's going to come now. But what I want to look at is this market in the context of the much bigger picture now. So we've got a graph of the top 40 on the screen that goes back over the last 5 years, back to 2010. And what I want to specifically look at is that 50-day moving average. The 50-day moving average is the white line that you can see plotted on that chart over there. Now, those boxed areas that I've highlighted are areas where the 50-day moving average has turned flat or started to turn slightly down. And I want to focus on those areas because it's interesting to note what the market's done during those times. And I look at the 50-day moving average as a very good barometer of medium-term trend and medium-term momentum. And if it's pointing up, well, then it's fair to say that the market's in an upward trend and the momentum is up. And that's the best type of market to trade. It's the easiest type of market to trade. It gets very difficult when you get into these choppy type of situations, like what we can see in those boxed areas there. And notice how the volatility has picked up in all of those areas where I've highlighted it with a box, where the 50-day moving average has rolled over. Notice the volatility, the choppiness, and those are difficult environments to try and trade. Now, I highlight that because right now, our 50-day moving average is still pointing up on our market. But keep in mind that this is a lagging indicator. It's 50 days worth of historical trade data. So it actually takes a while for that 50-day moving average to start to roll over. But my sense is that given the weakness that we've seen in the market over the last 2 weeks or so, there's a very good chance that unless we see a massive recovery from these levels, I think it's pretty fair to say that that 50-day moving average is going to start to roll over soon. And if that's the case, we probably are going into another one of these choppy, volatile, erratic type of environments for the next couple of months and possibly even into the third quarter. And I think we just need to keep that in mind going forward because it does make trading tricky and you do need to adopt a slightly different style of trading to a typical trend trading environment.
I mean, that chart goes back to 2010. So I don't know if people can actually see the numbers on the bottom of the screen there. And generally, it seems to be the May, June, July sort of period, except in 2011, I think, when it was a little bit later in the year. And so we are going into traditionally weak time of the year.
That's right. It is historically the middle months of the year. So it's our winter and it's the Northern Hemisphere summer when it gets a bit choppy, a bit trendless, a bit directionless. I've often said to people, if I had tons of money and no responsibilities, I'd actually take these winter months off and avoid the dusty, smoky Joburg winter and go to Europe for 3 months. But alas. I'm missing the lack of responsibilities and the tons of money needed to do that. So we'll stick it out and try and trade our way through the winter months here in Joburg.
Garth, having said all this, you do have the protection of the put option structure, which presumably is now working for you. Yes,
it is working for us. So this is now the payoff of our various different option structures that we've put on for the June futures closeout. And now that closeout is on the 18th of June, so 2 weeks' time. And then this whole thing will expire. Now you can see, it looks a bit like a mountain range, but that really is the payoff profile of where our structures will settle on closeout on the 18th of June. Where are we right now? Well, our top 40 futures been trading at 46,000 today. So it means we've currently got a mark-to-market profit of 14,000 Rand on this thing, which is nice. So it's telling you that this type of protection does work. Yes, the market's been clobbered in the last week, but we've actually been making money out of this option structure, and the protection that we sought is working.
Yeah. Having said that, it'll be interesting to see where the market closes on June the 18th, because you are to some extent hostage by the date of the closeout.
Yes.
So one hopes that maybe there isn't too much of a reversal on the market or a bounce, as it were, because you'd lose some of the benefit you are gaining now.
Yeah, we would. But I think, I think the likelihood is we probably will stage a bit of a bounce here. But that structure makes us money sort of more or less anywhere as things. Unless we get hit below 42,000, which is highly unlikely, this structure is going to end with a profit.
So, Garth, what does the portfolio look like then, given that you've got that helping offset the losses from Mediclinic and Capitec?
Yeah. All right. Well, there you can see all of the recent trades. So the top two are the option structures that we've got in place, both making money. Then we've got our Capitec and Mediclinic trades, which we discussed earlier. Both of those have been closed out this week for losses, small losses in both cases, which is not the end of the world. So Our portfolio is sitting with almost 329,000 Rand, which is still up 31% for the year to date. So it's still a very good performance. And quite honestly, with the market being in this choppy sort of environment that I highlighted now, I'm not uncomfortable to be situated like we are as things stand right now.
And then very quickly, you've got coming courses this weekend, I think?
Yeah, I'm very busy towards the end of this week. On Thursday night, I've got an Understanding CFDs course on the 4th of June, and then Saturday, a high probability trading course on the 6th of June. Anybody interested in attending either of these, please email me, garth@traderscorner.co.za, and I'll send you all the details.
Great. Garth, we'll leave it there. We'll see you next week. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.